Hi, everyone. Happy Monday. I'm Lucy Hargreaves, and welcome to Build Canada Live. As some of you may know, Build Canada has a very audacious, ambitious mission, which is to make Canada the most prosperous country in the world. Today, I'm thrilled to be joined for a live conversation with an incredible Canadian founder and builder, Som Seif. Some of you may know him as the founder of Purpose Investments and Purpose Unlimited. He's a longtime Canadian builder in finance and also the recent author of a Build Canada memo about stablecoins, where he lays out his argument for how Canada can do more and do better on stablecoins to make sure that we don't miss out on an incredible global opportunity. So, Som, welcome to the show. I'm super excited for our conversation today, and thank you for all of the support that you've provided to me and to Build Canada and the whole team over the last several months.
It's a real joy to be here, Lucy. I think what we're doing at Build Canada together and what you're leading is just such an important organizational effort, bringing together some of the greatest minds from Canada, but more importantly, some of the greatest ideas on how we make Canada just an unbelievably amazing organization, sorry, country. And, frankly, we all know what Canada is, and it's more about what can Canada be, even bigger and better. And so the role that we all play in doing that is really awesome. So thank you for leading this. And it's a great opportunity to have a conversation about a lot of things here.
Amazing. Yeah. I mean, I always say we have all of the ingredients we need to be the most prosperous country in the world. We just need to kind of package them together and put them together in the right recipe in the right way in order to get there. So,
No question, no question. And I just say that, anyone who would ever think that Canada doesn't have all of those pieces, I think is just missing something. We have some of the best talented, most educated individuals, most ambitious people. I think what we often fail to have is, and we have great ideas, by the way, what we fail to have is the resolve and the, call it, confidence to pursue these at this state and on a global basis. And what we need to do is celebrate those who are doing it so that everyone else feels the energy of what it feels like, what it means to go and do it. And so it's an unbelievable opportunity for this country if we can just get ourselves focused on celebrating success and having the ambition to go after them. And it's okay to fail every once in a while, because that's actually a key benchmark of success is failure, right?
totally. And I love the energy and the ambition piece. I actually got a new ear piercing back in the fall last year, which is a little lightning bolt, and it's my daily reminder when I look at it in the mirror. You can't see it here on camera, but
Love
it's
that.
like this little tiny lightning bolt, and it's like we just need energy. We need positive energy. We
Exactly.
need to be ambitious, and like let's remind ourselves of that every single day.
I love that. I
So.
love that.
Yeah. So with that, let's dive in. What made you want to write this memo on stablecoins?
Well, I mean, first and foremost is, I think that I've been fascinated for a long time around tokenization. It's actually what got me into crypto in the first place back in the sort of 2016 timeframe. When I first kind of read and started to really dive into what Ethereum is about and smart contracts and tokenization. And it got me super jazzed about what the world could look like, or especially when you start thinking about innovation as a builder, but also innovation on behalf of what the future of both financial services could look like, and then future operating infrastructure. And then when I look at that, stablecoins to me is really the first real, logical, real world, call it, use case of tokenization in a way that can truly change not only the, call it, infrastructure of how money flows and such, but also just integrate so deeply into the way that so much technological evolution is happening, from AI to just commerce and all the rest of it. So it's such a powerful first use case, but it also validates so much of what tokenization can be as we kind of build from there. So the layers that it will ultimately drive, not only in, call it, vision, but also the, call it, opportunities that it will create, is kind of, I can't even imagine what will come out of this if we get it right. So that was the foundations, and that's why you lean into stablecoins, because they absolutely make a ton of sense. There's a whole bunch of things that are happening. There's great progress happening globally right now. and Canada has to win and be relevant here at this time. And so that's inspired me to say, let's stand up and write a really important memo of what Canada should do to win.
What exactly is a stable coin and why
Yeah.
should Canadians care?
Yeah. So in its simplest form, stablecoin is just a kind of a form of a currency. And it's a token. And if you actually think about money in general, money is just a token, and what they call them is either fungible or non-fungible token. So a Canadian dollar is basically a fungible token. So it's in the form of either a piece of paper or a coin, or a digital, call it backing, whatever it is, but it's a fungible token. And in the real world, in the traditional, call it financial world, money is ultimately transacted in, call it the rails of the traditional way. So, there's, your bank account, there's your, the payments rails, Visa and
Mhm.
MasterCard and other things like that. If you get into the institutional workflows, there's things like Swift network and, call it money transfers and stuff like that most organizations will work with. But these are the types of ways that money is flowed, but it's all based on token. If I have a Canadian dollar and you have a Canadian dollar, theoretically they're worth the exact same thing, and we can transact in that, right? But they're done in a more physical, traditional way. A stablecoin is the same thing. So it's basically backed by some ultimately asset. In this case, might be a fiat currency like a Canadian dollar or a US dollar or something like that. But it is ultimately tokenized on the blockchain. It's tokenized in a jurisdiction that is fungible and easily used within the blockchain infrastructure. So it's the same construct, but it has a really interesting and important ability for it to now work in call it a bunch of different value-added ways. So, for example, it eliminates a large part of the agency that, as all blockchains do, that are required that you do with traditional financial assets like Canadian dollar or US dollar. And so what that means is that right now, if I want to transfer or work with my Canadian dollar, I have to work with a financial institution, or I have to work with an organization, a payments infrastructure like Visa and MasterCard, or I have to go and transfer money on Interact, or I have to, if I want to wire money to my friend in or some organization in Europe, I have to work on a Swift network. Like all of these, call it agencies, these call it infrastructures that currently the entire financial system is built on. All of that, what I'd say, is rent seeking. They play a role, but they're all done in ways to allow for individuals, organizations, corporations, everything to basically move money around or work with each other in a trustless environment. Blockchains eliminate all that, as you know, and that's the beauty of blockchains, is that they ultimately are a replacement for all of that, call it legacy infrastructure. They allow for two parties who have, who want to do business together or transact in one way, in this case, monetarily, to do that without the need for someone in between them. And they allow for people to ultimately do that in a way that is in a trustless environment. I mean, you don't know who the other person is potentially, and you can do that in a very seamless way. And so, stablecoins basically are a way for people to do the exact same things they do today, but without all of and relying on all of the infrastructure that the current financial system is built and structured on.
Right. And I was going to ask, I mean, you sort of already answered the question, but what's a problem in my life that I have today
Yeah.
that, stable coins would help make
Yeah.
easier or better?
So it's really, really a fascinating question. And this is actually why, for 99% of individuals who are thinking about, the banking system today works perfectly fine for me, right? Like
Yeah.
if, I go out for dinner and, I'm splitting the bill with my friend, I want to send them a little bit of money, I can do that through my e-transfer and it doesn't cost me anything, right? Or, if I want to pay for something, I can just pull out my credit card and, there you go, tap, and then I'm done. So for most people, when you're, call it, in a developed country like Canada and in a jurisdictional environment, so I'm basically working within the jurisdiction, it's pretty simple. Now,
Mm-hmm.
there's a whole bunch of things around the back end of that, which I'll get into, that are more technically important around how that infrastructure operates, all the, call it, operate builders and people like that around that basically have to, call it, rely on the infrastructure to basically do their business and pay the rents that are going there. So, for example, if you are a really great innovative company that's building a really great payments card to compete with, the banks or with, even Visa and MasterCard, you still have to rely on all of those guys for the infrastructure, and they take a pretty big toil. So like, you pay a credit card, 2.5 points, oftentimes to do a transaction, whether it's a small business that collects that revenue, or if it's an individual, that's the transactional agency, 2.5 points, 2.5%. That's a
Yeah,
pretty big toil.
that's pretty huge over time.
Most consumers don't see that. So
Yeah.
you would never say it really bothers me, but the call it system feels it really deeply. The bigger thing is when now you go outside of Canada. So I'm sure many people who are listening have traveled. And if you've ever gone to transact between Canada and the US, or which is probably the most efficient call it market, where it's the cost of buying something in US dollars to Canadian dollars and transacting that way is probably 200 basis points, so 2%, for most individuals. But it's still a big toil, right? But you can do that. Now, if I want to go transact somewhere in Europe, well, maybe that spread is now 300 basis points. If I want to transact somewhere in Asia, maybe it's 500 basis points. In certain parts of Asia, it might be 12%. Like, there's big toil. And those are costs that you as an individual bear every single time you do those transactions. Now, let's think about a different way. What if I'm an individual and I want to send money to my friend in Europe? What does that mean? I now have to work on a wire transfer. And to do that, I have to work within the systems of, sending the money is very challenging. And it might cost me 20 bucks, 30 bucks to send a wire to them. And that's because there's a whole system that basically, structures that. And now, if you wanted to send back to your friends 20 bucks for something, it's going to cost you 25 bucks to do so. So there's just such friction, and you have to do that within the rail systems of 5 days a week, banking hours, all the rest of it. If you want to do something on a Saturday or Sunday or instantaneously, you just can't do it. So when you now go to call it stablecoin structure, this is a totally different world. And most people, when you think about this, again, won't feel the friction internally. When you feel externally outside of the jurisdiction, it makes a difference. And why is that relevant? The reality is that Canada and every country represents a certain amount of, call it, transactional global trade. So as a country, we are 3% of global GDP. That means that on about average, 3% of global transactions, money flows, business to business movement, large and small transactions, we're about 3% of that. Okay. And the reality is that every single time a transaction is occurring, and by the way, also like, investments, like, foreign investors who are looking to deploy capital around the world, we capture about 3% of that. That's it. That's how to think about that on average. And the reality is that, that all of that transaction, that's trillions of dollars, all of that transaction has significant friction to it, trillions and trillions of dollars. And all of that money in Canada specifically, just 3%, has a impact on the financial system, on, effectively agents who basically make a lot of money in that spread. But also on top of that is all the businesses and individuals that interact between them. And so stablecoins are going to be and are really critical to enable a reduction in friction for Canada to ultimately engage on a global basis. Okay. The second thing is, as we think about the world that we're going to, when you see leadership that's happening on a global basis between now what's happened in the United States with the Genius Act, and they are fully leaned into this. And we're seeing out of Europe a really core focus even on acknowledging stablecoins as a payments asset. What's happening in Singapore, all around the world, you're seeing players recognize that this can be a really important tool. And if Canada doesn't do something, what ends up happening is that 3%, we ultimately start to fall behind, because when people start to do business and using this as a tool, they will ultimately go to the jurisdictions where it's the easier place to do business, where money will be easier to transact with.
Yeah.
And so it's both a opportunity and a risk for this country if we don't take this seriously about what we need to do to win on a global basis.
Yeah. It's so interesting because Canada helped invent the blockchain, but as you have just laid out, we're falling behind and applying it. And I'm just curious, like, to get your perspective on what went wrong. I mean, like, it's pretty clear, like, what the opportunity is, but why did we get so far behind where other countries are at on this? And, what are the kind of 2 or 3 or 4 concrete things that we need to do to actually kind of fix where we're at today?
Yeah, look, I mean, Ethereum, which is probably one of the most unbelievably important blockchain infrastructures, protocols, that a large part of tokenized assets and stablecoins are ultimately being built on top of, as we all know, was founded here in Canada.
Yeah.
And Vitalik, Buterin, who is ultimately the real founder of this. There's a whole bunch of people who call it claim founder partnership, and Vitalik's always allowed for that. But the reality is he's the real mind behind development of it. This actually goes to our earlier statement about Canada has all the talent, all the ideas. It's a question of what we do with them. And so, this is a global opportunity. I mean, Ethereum is, to me, it's the largest asset we've ever built in the world. It's bigger than the largest company in Canada, Shopify, RBC, whichever one it is, in any one day, by about 1.5 or 2 times now. So it is the largest asset that's ever been built, business that's ever been built in the world, from Canada. The reality is what it's not to say that what's went wrong. It's just that what we didn't do well is recognize that talent and those ideas were here in Canada, and that ultimately between our government, our regulators, recognizing the opportunity to enable this and drive it as a asset that we can, really build off of. So what ended up happening is, in fact, during the earlier days of crypto and blockchain, there was a lot of positive, negative signals, and some of those negative signals would have made builders feel like it was easier to go to a jurisdiction where they could ultimately build without scrutiny. And that's why we saw a lot of it. Now, it doesn't mean that, it's all lost. It's just, that's a really great example of what we have to try to avoid as a country. We need to try to encourage this type of innovation. We need to try to encourage individuals who have great ideas to experiment and drive those ideas from Canada. Now, Ethereum is a global asset. It's available for everybody. It's there. Let's take that aside. Now let's focus on what should we be doing now, which is that, Canada, ultimately isn't, far behind. It's
right.
not, but it will be in a year or two.
But we need to do something in order to not get further behind.
That's right. When you see the US leaning in so aggressively with the recent Genius Act, but also just the administration recognizing the importance of tokenization, stablecoins, and AI in a combined way, that's really the important thing. I think the when you look at the combination of what Canada has done from a global basis of punching way above our weight, from an AI and call it innovation and the technology that we have ultimately, we were one of the critical leaders in driving all the research behind this, and the lack of ability to call it scale and own that intellectual property over time because we just didn't put the capital in the environment. We didn't focus on supporting the builders from here, and we had tokenization and stable coins and blockchains as well. That's where the missed opportunity comes in. But we need to now focus on how do we bring it all together. And the US is now leaning in hard on this.
Yeah.
And so the opportunity is now. And if we don't do something, in 2-3 years, it will be gone. And that's a really important, that would be the urgency of why this is so critical.
And you had specific recommendations in your memo. Could we take a few minutes just to kind of walk through from a very tactical standpoint? And apologies for some people who are listening who, might not want to get this deep, but I think it's actually important because, and this is the power of the approach that Build Canada has taken with these memos, is that, sometimes in the policy space, we have a tendency to sort of stay kind of high level and talk about change in a more general way. And we leave it to policymakers within government to sort of figure out and parse what it is that we really mean and what we're really looking at or recommending as specific changes. And in the Build Canada memos, we actually do work with memo authors like yourself to make very, very specific tactical recommendations. So I'd love for you to kind of walk through those a little bit and bring those to life.
Yeah, and I think to add to that, one of the theses that think we have at Build Canada broadly, is all the people involved and who are leaning in, is that if government and regulators ultimately create clarity and provide, call it foundational support, that the builders will ultimately build. And we're
Right.
not looking for government to ultimately build for us. We're not asking them to do the things. What we're asking for them to do is just to create clarity and give us the, call it, capabilities to the environment to build within. So actually, the recommendations are very important around that simple thing. So one, we need to create and define stablecoins into law. And this is actually a really important, simple thing, which is that when we look at the concept of stablecoins, there's a lot of great use cases of what they can do, but we don't actually have a clear law that a builder could, with confidence, go into and say, we'll start to build and
Mm.
create these so that Canada can have the right infrastructure for Canadian dollar stablecoins and other types of stablecoins. But if we don't get them into law, then builders are building with lack of clarity, and who knows how it's going to change over time. So there's always a lack of confidence there. So putting them and classifying them as a digital payments instrument is really important. There's some actually things going on right now which have been taking us down the wrong rabbit hole, which is putting them as securities
And
and defining them as securities.
what's the issue with defining them as securities?
So money flow is that two people are basically interacting, like money can flow out, everything, and you don't need to call it document all those transactions other than through AML and call it KYC and things like that, which are traditional in the banking infrastructure. You need all that stuff, absolutely. But with securities are regulated under securities documentation. So like think about it like a stock or a bond. You have to file prospectuses, you have to file notices, you have to effectively every transaction between a security has to basically be documented. So it basically means that a security is what would normally be you and me passing money, or people doing payments every single day for whatever types of commerce or transactions, would now have to act with the same structure as a stock and bond. It doesn't work. And the US was very clear in their Genius Act about this. And so defining it as call it the digital payments instrument is so critical in its ability, because then it becomes a money asset. It's a true money asset, and that's important. Okay.
Is that how Singapore defines it as well? You had mentioned
Yes.
Singapore as a leading jurisdiction in this space as
Yeah.
well.
So what you're seeing that in Europe, you're seeing that in the UK, US now, in Singapore, all are treating it as money assets. That's a critical item. And if you treat it as a security, it will create huge headwinds and the inability for the infrastructure to actually play out the way and create that low friction utilization that it actually needs to be, like a normal money asset. So that's a first really important thing. The second one I think is really important is that I think that when you think about regulatory infrastructure, you want to create regulatory environment where these are regulated. Like you don't want the sort of Wild West with these things. Those can be that lead to really ugly outcomes, as we've seen in some scenarios of tokenization and stuff like that. You need to have regulatory environment. So the second thing is you want to make sure that this is actually structured within the right regulatory environment. And our view is actually the Bank of Canada should ultimately be the regulator of choice here. They understand the Canadian dollar. They understand, what's going on within, the call it commerce and the movement of money and streamlining all across around the world. So it's really important that we think the Bank of Canada should ultimately be the ones who are leading the charge on regulatory oversight of them. And that will allow them to also look at things from the same way they look at banking, the reserves infrastructure, so every single CAD dollar, stablecoin should be backed one-to-one to an asset that it's ultimately linked to. There shouldn't be the concept or ability to have leverage or like a traditional bank does, as you know. They should be built exclusively one-to-one, and those types of reserve, call it oversights, can be done very easily by the Bank of Canada because they're very confident and they understand how to deal with that stuff. I think the third idea is that I think it's really important. We have a retail payments, call it Activities Act. This is a kind of an act that allows for both the industry to operate, like payments players, payments providers, and systems to operate, but also have the right regulatory oversight over them, so that they understand the frameworks that they can do, what their activities are within. And so we actually think that the RPAA, which is the Retail Payments Activities Act, should be amended to recognize stablecoins as a asset within the infrastructure, and then ultimately it has to live within the regulatory environment that all money assets would. So AML, KYC, all those things, AML being anti-money laundering rules and other things like that are really critical. And that creates confidence in the system because it allows people to know that you're working with something that over time is always going to be a good asset to work with, right? And that gives the builders the confidence to also build within that, right?
Yeah.
And then the last thing, which I think is really, really critical, there's a lot of conversation about open banking in this country. We've seen the last government, had put it into budget. We saw very little activity after that in terms of moving it to actual legislation and call it into the infrastructure. But why I think this is important is we need to ensure that any stablecoin that we are building is forced into the call it banking infrastructure, specifically new banking infrastructure like open banking, so that all the existing financial institution FIs are ultimately seeing the ability to engage with this. If you don't do that, then it will always sit outside of the ecosystem, and the FIs will not feel comfortable engaging with it. So it's really critical that we acknowledge stablecoins as a part of banking infrastructure that allows the banks to engage deeply with it and all of the existing payments providers to ultimately utilize it. And that will be really, really powerful. And that will make Canada a very successful player and create an environment for builders to build within.
Yeah, it strikes me that if you set up a two-tier system, that you're just by design limiting the scale and scope and pace at which you can go to roll this out and develop it and actually get it into the hands of consumers and businesses to use it in their day-to-day transactions. Can we talk sovereignty for a few minutes? I'm actually really curious. Like, there was a few things in the memo that you wrote around the importance of having a Canadian dollar-backed stablecoin and the potential sovereignty issues of not having that. And I would love for you to spend a couple of minutes explaining your views on that.
So this is actually like exactly what I wanted to talk about, which is I'll start with it as an opportunity first, because I think that's where we have to kind of look at it is. So going back to that comment, we are 3% of global GDP on commerce. And, over the last 10, 12 years, one of the things that's been really one part of, call it global trade, that's been really difficult for us is that we've seen a decline in capital investment into Canada. We know that. Our net capital inflow has been, negative. So that means that more money is leaking out of Canada. So capital is in whether that's businesses, individuals, or organizations and pension plans are investing abroad outside of this country more than people are actually investing in Canada.
And I think it's also important to call out we've had record outflows. Like, it's not just we've had a little bit of outflow in the last 5-6 months. We have had record. I think the last number that I saw maybe about a month ago was $86 billion in outflow since March or April.
This is a huge issue. It's a huge issue. It means our businesses are choosing to deploy capital outside of Canada, other jurisdictions. It means our pension plans are saying we'd rather invest in Europe or UK or US than invest in Canadian ideas and infrastructure. It means our Canadian individuals, retail, are taking money and buying US stocks or European assets or real estate elsewhere rather than buying assets in Canada. That's what's happening, and vice versa. This is a critical thing. And we have to reverse this. We have to make Canada a place where both Canadians want to invest, but also globally, people want to invest in Canada. And so, but that's where this becomes a really unique opportunity. There is a huge jurisdiction of capital that's growing within both the crypto jurisdiction, trillions of dollars, but also globally beyond that. As stablecoins become more of a core infrastructure for trade, you want to win. If you look at it from the US, why is the US leaning into this? US is about 50% or just under 50% of global trade. We're 3%, they're 50%. They are today representing, because of their early leaning into it, 85% plus of stablecoin activity. That means on a global basis, people are choosing the US dollar backed stablecoin substantially greater than they are doing trade with the US. And so that is a punching above your weight opportunity. The US is winning. And what that means is every single dollar that goes into a US dollar backed stablecoin is going into US treasuries and US dollar, call it US dollar assets. That is a huge opportunity. That's why they're
Yeah.
punching.
Which also explains a lot of the rationale behind the Genius Act.
That's exactly right.
Yeah.
Canada has an opportunity today. And in fact, just like we did in AI and other things, we can punch way above our 3%, mark. And that's why being early in this is critical. So we could actually end up being 5%, 10%, 7% of global trade if we make it low friction to do business with our asset. And that's a critical component. But that's the opportunity. The downside is that opportunity is not going to last for 2-3 years.
Right.
This is happening fast. And if we don't establish ourselves in 2-3 years, we're now questioning whether we can get our 3%. And that's where I'm concerned. And so we have to move fast with urgency. This is truly a critical thing for our country and for the way commerce acts and how capital flows. Like Canada is an amazing country, but ultimately money will go downstream to wherever the easiest place for capital to invest. And that's where we have to make this easy.
Why do you care so deeply about building in Canada? Stablecoins aside, you and I actually share something that I don't think you know about, is that we were both born in the UK.
Oh,
and so you moved to Canada, I think, when you were 3 or 4. You're extremely passionate about building here. You've built companies here. Why do you continue to care about that?
I love this country more than anything, and I came here when I was 3. This country accepted my family. I have a huge debt of gratitude and burden to this country, and of what I have to give back. And I love and believe that Canada truly is one of the greatest countries to build in. I believe we have a lot to do to make sure that we make it lower friction and encouragement at all levels, from government to media to other businesses and all the rest of it. But it's just innate in me that I believe that we have to build and we have to win. And I think I go back to it, like we have some of the most unbelievably amazing talent in this country. We have some of the most unbelievably sized capital pools in this country. We are an amazing environment to build within, and I believe that Canada ought to be an unbelievably and amazing global player when it comes to some of the greatest companies and the greatest innovations. So it's just we all have a choice, and I've made my choice very clear. And I do this because I'm patriotic to this country, and I always will lean in on helping Canada win.
I always say the only reason that we're not the most prosperous country in the world right now is because we collectively choose not to be. So we have agency and we have choice. So
yes, yes, we make it hard on ourselves sometimes, and sometimes if we can just go back and think about and look in the mirror, I think we can turn this around very quickly. We can Canada is an awesome place in many ways, and we all know it. We all know why we love this country. And I just think we can make it so much better, so much stronger.
We're almost at time. Som, if you could leave our audience here with one message, whether that's to builders or to policymakers or to people who just feel kind of passionate and optimistic about building a better future, what would that be?
So I'll say the Canadian, one of the great things, but also has become a big crux for us, is that we have relied so heavily on our '08 environment, as the Canadian banks didn't fail and regulation helped them not fail. And so therefore that has built so much of the goodwill that has gotten in the way of innovation in financial services and on innovation when it comes to financial infrastructure and technology. It's because why do we need to? We're good. Our banks are great. We've lost the plot on what innovation is and what it means to be globally relevant. And what I'd say is this is not about protectionism of the past. It's about innovation of the future. And frankly, we all ought to be leaning on this because it's about what makes Canada a prosperous nation is when we have a fluid and innovating financial infrastructure and system that makes Canadians better off. And if we don't have globally competitive financial infrastructure and companies, then ultimately we will fail at this. And globally, when you have nations like the U.S. leaning in on this and other regions around the world, it makes us even more challenged. So there is a real depth of urgency, but more importantly, a real focus on, call it, unshackling us from this idea that we're already great and we're fine, and leave it as it is.
I think we'll leave it there. Som, thank you so much for your time. I'm super grateful to everything that you've given us in the last 30 minutes, for your thought leadership with Build Canada, and also just what you've contributed to Canada as a builder and an innovator. So thank you.
Thank you, Lucy. It's great.